The long-awaited day is finally all right here. Fed interest rate decision, FOMC economic projections, and Fed press conference right after. Welcome to next episode of Blockrevision. Let me find out whether we are live and everything works as supposed. All right, so yes, that's the stream is going on. If you haven't informed your neighbor about the new episode of Blockrevision, you may do it right now. Thank you very much for tuning in. The question for today's episode will be as following. Where will lead us Fed policy? Should the market fear the meeting, and where? And the question is, what will be the dot plot guidance for next months that would have certain reverberations on stock market? So, without any further ado, let's get into next episode. Okay, and we are with first block economy view. Let's kick in first dose of news. So, what has Fed to do today? So, we have almost everything priced in. 0.5 interest rate hike has been backed by the market since, I would say, the middle of November, more or less. And the only one thing that we may react conversely to the previously set trend that is up is where the chair Jeremy Powell will be convincing investors there is non-dovish pivot. Or on the other hand, he will insist that officials won't prematurely end their assault against inflation. So recently we've had these CPIs that were somewhat optimistic, but right now we need something more. We need a reassurance that that will reflect on Fed's guidance. That's why all investors' eyes will be on the dot plot, the conference, and what Fed Chair Powell will be telling us in terms of the path for interest rates going forward. And important is the rate projections that could offer clues on how soon officials expect to pause the rate increases. A more modest increase in the terminal rate may suggest that officials could stop hiking rates as soon as March, while a higher peak may suggest that the rate increases could continue further into next year. So, if you are cautiously tracking the Fed's policy, you may find out today at it was at 2 p.m. East time that event take place. At about Fed conference, and right before. Let me remind what was the time. Yes, the right before Fed interest rate decision. Yes, as well at 2 p.m. That's FOMC economic projections right over, and Fed press conference that will last a bit longer. All right, so we are getting back to where we were. Just look at this. FOMC may project slow growth, higher unemployment, as the unemployment rate in 2023 looks as being peaking, whereas GDP growth still climbing up. So we are not assuming, so officials are not assuming that we may go through recession, hard recession, but maybe milder slowdown. So that's why, especially with this inflation rate, CPIs heading lower, there is no rush for further higher interest rates. That's why this dot plot should get changed. I will inform you everything about everything tomorrow. What happened and what's on the outlook for the economy in tomorrow's episode. I would like to inform you that on Friday we are not broadcasting live as I'm off, but I will try to. I will broadcast another informative video in terms of stock market and technical analysis. So hopefully you will find out informative. And if you haven't subscribed to the channel yet, you may do it right now if you want to be updated on what's going on the market. All right. Right now, let's get back to earnings looming large. So you can find out right here S&P 500 12-month trailing net profit margin in percent. So margins are coming down faster than expected. Right now we are deviating from recent trajectory, and the one thing that we can recognize that the margins are somewhat decreasing is not only this curving of a line, but also that's in quarter 3 net profit margin S&P 500 have been at 11.9%, and right now have been trending lower. Also, GDP growth, as you can find out right here, is coming down to 6.7% annualized in quarter 3, down from the average at 12.2 annualized in 2021. Also, revenue growth could be lower than current. That's why revenue growth could be lower than current estimates. The move higher in interest rates as the Fed continues to fight inflation will force up corporate financing costs. That's why I also adding up this factor to that earnings may decrease, and the valuation of major indexes is nothing less and nothing more than this aggregate of earnings of companies that are included into this index. That's why keeping a track of earnings is very, very important. So we need to know that right now we are in a very particular environment where those headwinds may even get stronger. All signs on heaven and on earth looks will pay this way or another for ultra low interest rates, shaped balance sheets by encouraging private sector and government borrowing. So we'll also need to pay for this aggressive risk taking in search of yield, increasing the likelihood of asset price bubbles. And the last but not least, the question is how central banks will respond to those risks manifest. Okay. So talking about the projections about earnings right now, let's talk about somewhat like forecasting what will happen in 2023. So many of you want to know how to position yourself into upcoming new year. That doesn't mean that you should look out for predictions banking sector analysts. You may thought as a working in such industry they would have been well, so for working in such industry, they would have been well informed. To be sure, right now, as you can find out, that's to be sure, Mr. Kolanovich projection for 2023 that will rise just to 4,200 by year end 2023. But I need to know what you think about Mr. Kolanovich. You may post it in a chat live that is going on. But if you ask me, this projection is taking into consideration of disinflation, rising unemployment, declining corporate sentiment, and that everything adds up to a projection where Fed may start to signal a pivot. But if we may signal a pivot, I would say that the markets will go up even further. By the pivot, I don't mean lowering the pace of hiking interest rates, but the interest rate cuts. And for this one, I don't expect to happen in 2023, rather 2024. So Mr. Kolonovich taking this and throwing up this analysis calls haven't mainly worked out this year. His previous 4,800 price target on the S&P 500 is 20% higher than where the benchmark closed on Monday. The bank's year-end target of 4,200 for the index next year suggests a 5.3 gain from where it currently stands. So investors who insist on understanding the causes for the market's moves risk focusing on faulty causality or inappropriately anchoring or on false explanations. Many of the big moves in the market are not easy to explain as there are thousands of factors, and the best forecasters by many are weathermans, but projecting 2 days ahead they are betting wrong very often though. That's why you need to be very cautious in terms of such projections, and that's why I'm talking about this faulty guidance of those market analysts. Getting back, annotating history of the 2022 bear market overlaid with Marcos Kolonovich weekly recommendations to buy each and every dip. If you have enough sharp those subtitles, you may find out that he was wrong in around 80% of the time. So those who follow the advice of Marco, or is that by someone called Markko, better have the same infinite balance sheet as his employer, or else they will end up with that Katie Wood. Of course, at one point, Marco will be right, the stocks will go up eventually. That point will be by what the irony says, that point will be when even the Fed realizes it has pushed stocks too low, too fast, and panics, sparking a historic short squeeze rally. So just my point on this is that remember about that broken clock is right twice a day. Okay, right. So let's get to market outlook. Let's find out quickly what's happening right with our major indexes. So US 100, US 100 is right now. Oh my gosh, it's very noisy right here. So yesterday we have extinguished this bullish appetite candle. Now, this candle has been sold off heavily, and I dare to claim that Those were the algorithms that were buying up at the beginning and then selling off at the top. So computers were probably playing with retails, and that's what is happening right now. Is just stagnation before another move higher. So this ATR is dropping. That means we are preparing for what Fed may tell us. Also, SPX still haven't crossed our downward line. It means we are still in a decisive mode that may eventually be sorted out today evening. So S&P 500 already tried to cross this one, but was sold off heavily right after market opened. Getting back to the market outlook, just look at what I found. Many of market analysts finding out the death cross in VIX volatility S&P 500 recently been we've crossed EMA 100. It's sorry, not what I meant is a crossing of EMA. Yes, 150. 50 EMA is right here on gray, whereas 100 is on blue. And recently, when this cross has taken place, it was back in November of 2020, right before the stock market rally throughout next year. Whereas this time, when the gray line is crossing the blue once again from the upside, it would mean that the fear is over for stocks. But it's just an observation, so don't stick to it to a large extent. But just bear in mind that that's one of the signs that bulls should turning up on the market within weeks from now on. So that's kind of positive. And right now, let's get to crypto outlook. And do we have new entities involved in Sam Bankman's Fried case? So the Securities and Exchange Commission on Tuesday accused Mr. Sam Bankman-Fried of carrying out a multi-year scheme to defraud investors. He is alleged to have misused billions of dollars in customer funds to prop up his Alameda Research crypto fund and faces up right now to 115 years in prison if convicted. That means Bahamas. That means by talking about another case, Bahamas asked him to mint new digital coins worth hundreds of millions of dollars and then transfer those tokens to the control of island officials. So that means that Bahamas government is supposedly known about some dodgy procedures, and we know we are expecting another elements from this case. Right now, let's jump to another element. Let me find out. I need to switch the windows. Okay. All right. So in terms of Sam Bankman-Fried web of influence, just look at how many entities were involved in this case. Right now, we are finding out that some of them has filed bankruptcy, as for instance Genesis, Digital, BlockFi, and some of them as well. But there are many more entities that may yet turn up with allegations against Mr. Bankman-Fried. So we can find that the chain is absolutely anomalous, and that's what resembles kind of a layman moment for the industry. So Sam Bankman-Fried is alleged to have misused billions of dollars and supposed to be convicted. Also, after Sam being extradited to US, the things may be over soon, as when multinational corporations file bankruptcy in the US, a federal judge usually has authority to distribute all of the company's assets. But that's everything after final reorganization plan is approved. But when it happens, international legal fights can drag on for years, delaying payment to creditors. So I feel very sorry for every single entity that suffered from this case, as it may even drag on years. But I was in a similar situation when some of the crypto exchanges has demised. That was Cryptopia, and when Polonix exchange had issues, also been suffering. And unfortunately, some of the money that I was keeping on the exchange, I haven't restored yet, as the procedures are not clear enough how to do it and who is in charge of it. That's the poor reality of crypto West Coast. All right. So also we have another allegation. Mr. Sam Bankman-Fried, Alameda's transactions were skirting some steps to execute orders. So it looks like they had a priority of filling their own orders, where the other entities had it lagged. That's why they were so profitable for that so long time. But nothing can't last forever. So in the high frequency trading sector, this is a significant time advantage, even if milliseconds they had before the competition. Oh, that's many things that I have even got a stomach ache. So that's unbelievable what's going on right with this case. In terms of market movers, let's jump to next element, and this is not the chart, but yes, inflation rate in Great Britain has peaked recently at 10.7, but we are still nowhere near from stabilizing the situation, where we right now in the highest inflation since 1977. So that's not making things any better, but giving some hopes for the future that it may eventually pivot and stabilize, but possibly not even next year. For today, we are waiting, obviously, Fed press conference, and right after balance of trade we have in Japan, and tomorrow we have Bank of England interest rate decision, and right over retail sales from US and ECB interest rate decision as well, with some of the guidance yet to deliver. That's why it's very interesting to watch what will be the quantitative tightening outlook of ECB. Okay, so we are right now jumping to trade idea section, and let's find out what's going on right here. What's my proposition for today? My proposition is WTI USD. Right now, crude oil is rebounding out of the area that wasn't any of the strong level. That's why I do expect this one, WTI USD rebound, to not persist for long. However, we won't we don't want to spit into the wind, and right now shorting WTI USD is very risky. I would wait with any type of position today by Fed's conference, as it's the event that may spark somewhat high volatility. That's why if you are waiting at the best point of entrance to the market, the Fed's conference time might be the one of the most desirable, where this volatility may put us in favor of betting info or against the market. So every single trend that has commenced and lasting right now may end up with such an event as today's Fed meeting, as the guidance will spark market reaction this or another way. So WTI USD is on my radar. I don't have the exact position right now yet, but I would expect WTI USD to get to even to that level of 80.3. So we may test once again this recent lows that haven't been tested during this move. That's why this spike may persist even longer to this level. But if we find problems with handling this level of 77.7, I would even consider betting short against against WTI from then on. But I do expect that it will still climb up somewhat higher. That's why I'm observing WTI quite carefully with a exact emphasis on 2 p.m. and 2:30. So area of possible entrance is somewhere here. When this price will get to 80.1 or 78.9, there will be for me a possible area of taking a short position. So that's it in today's episode. Or maybe I would just attach a trading board just in case if you wondered. So there will be somewhat like perfectly like here with risk reward ratio up to 11.4. So it's very high, but we are, playing for big stakes. So let me know whether you had any questions to today's episode. I will just move the video right now. So thank you very much for commenting live. Thank you also for that you've been with me, and see you tomorrow at 8:45 a.m. as always. Thank you